field of practice also. So when we conduct that in an Islamic framework, as per the guidance of Quran and Hadith, that discipline is known as Islamic Microfinance. And we will be discussing that in this 2 credit course. So 2 credit means half classes will be conducted related to the 4 credit course, the normal course. And the weightage of this is half of the weightage that is given to the 4 credit course. So Islamic Microfinance. So this is combination of two words, that is Islamic and microfinance. And so we will be studying microfinance from Islamic point of view, Sharia point of view. The concept of microfinance is closely linked to poverty, because the target audience or the target customers or the target population of microfinance is the poor section of the society. A substantial number of people in this world live under poverty. And I mean, if we define poverty in simple words, like those who don't have financial resources to live as per minimum standard of living can be termed as poor. There are technical definitions also, for example, based on how much calorie input those people are taking, and definition based on income also. And there are other definitions also based on standard of living. I mean, there are different organizations that define poverty, but the basic idea is that, I mean, the crux, if we are supposed to define it, so and understand it and visualize the concept of poverty, then poverty is not being able to meet the essential needs of life, or essential or the minimum standard of living. If somebody is not able to meet that, that can be termed as poverty. The concept of poverty is linked to microfinance, because microfinance basically addresses the poor section of the society. And the ultimate goal, the ultimate objective of microfinance that is stated, that is said, is elimination of the poverty. So through microfinance schemes, through microfinance financial products, through financial institutions, microfinance institutions, the aim is to, the stated aim, we will discuss, the other dimensions also. The stated aim is to eliminate poverty. And because microfinance products are meant for the poor only, it's not meant for a person who is able to manage his financial resources, and he is able to meet the minimum standard of living. So according to 2018 US Census figures, more than 38.1 million people in the US lived below the poverty line. The example of US has been given here because the normal perception is that US is a rich country, so poverty is absent there. It's not like that. Homeless people are living on the streets of the financial capitals of the world, like for example New York also, and there are so 38 million people in US is a big population. 38 million people, as per a survey, are poor in US. So there are in every country there is poverty, whether it is a developing country or it's a developed country. um, the problem of poverty is prevalent and exists in every country. So as of 2015, an estimated 736 million people lived in extreme poverty, which the World Bank defines as surviving on less than $1.9 per day. So as per the World Bank definition, if a person is surviving on an income of $1.9 per day, that person can be termed as living under extreme poverty. And as per their estimate, 736 million, 1 million is equal to 10 lakhs. So it will be 73 crore. It was the estimate in 2015. So this much of people live under extreme poverty. I mean, there are definitions of poverty, and then there are definitions of extreme poverty. So extreme poverty. So of the total, roughly half lived in just 5 countries: India, Nigeria, Democratic Republic of Congo, DRC, Ethiopia, and Bangladesh. These are some of the countries where most of the extreme poor live. I mean, half of the extreme poor of the world live in these 5 countries. That is India, Nigeria, Democratic Republic of Congo, Ethiopia, and Bangladesh. So since most of the extreme poor people live here, so the microfinance institutions, microfinance schemes, the poverty alleviation programs must also be, must exist here to address this problem. What is microfinance? So let us define that. Try to understand it, that microfinance refers to, say, for example, microfinance is the combination of 2 words. 2 words having combined, finance and micro. All the dimensions, all the financial products, if they are conducted at a very small level, at a micro level, that can be termed as microfinance. In simple words, because microfinance means everything, but at a very micro level, at a very small level, because it will involve borrowing and lending, but the amount involved will be very less. It will involve supporting a business, that is entrepreneurship, or micro equity, participating in the business as an owner and providing finance. But this activity will be at a very, at a very small level. So the same thing that is done in venture capital financing at a big level. Large projects are financed by big financial institutions, that is called as venture capital. One version is also called private equity, that is also called private equity. So the activity is same, but at a very, very starting in and a very small level. So microfinance refers to providing services to low income group who normally don't have access to financial services. So microfinance means providing financial services to low income group. As I have mentioned in the first slide, that poverty is the most related concept with the microfinance, because microfinance is basically microfinance basically targets that low income group, that poor people. So if we are providing financial services to the poor people, that can be termed as microfinance. So now that financial services has many dimensions. There are various types of financial products. Borrowing, lending is one thing. Saving is another thing. Transacting, providing, mode of payment to them is another aspect of financial services. Investment services, investment advisory, insurance, that is a very neglected area in India. Very few people, buy insurance schemes, especially the health schemes. Given the context that most of the extreme poverty occurs because of this reason only, that is uh, medical emergency. If some health crisis occurs in the family, even if it's a normal family, that normal family goes into extreme poverty because of medical crisis in the family. And normally the insurance is not very much penetrated in the Indian society. The penetration is very low. uh, in every society, in urban area also, in the rural area also, insurance services are very less has very less penetration. So microfinance refers to providing financial services to low income group who normally don't have access to financial service. So normally these low income group are not an attractive customer for large businesses. Say for example, uh, saving account. So saving account, normally the private banks, say for example ICICI or HDFC or Axis, if some person approaches them, they have some minimum balance requirements. Say for example 20, even if they have, sometimes they have minimum requirements like 10,000 minimum rupee you have to maintain as balance. Uh, but they demand some more amount of money in the beginning, although it's their official figure will be 10,000, but they may say that you have to maintain 20,000, or you have to initially deposit 30,000 or whatever amount. So 10,000, 20,000 for people who live in extreme poverty, this is a big amount. So they want to eliminate that poor people from their customer. They don't want to touch those poor people, even if it's just opening an account, that is saving account. So and because they think that they are not profitable for them, because they will not bring more money in the bank, and the bank will the expenses associated with the maintenance of an account will be more than the income generated by the amount that they have kept in the bank. So then they don't think, the banks don't think that these small poor people are profitable for them. So that is why they are neglected, and they are kept outside the mainstream financial institutions, be it banks, be it insurance, be it investments, be it uh, even brokerage, that is brokerage business also. Normally so normally they target high net worth individuals, or even middle class that has some amount of money with them. So there is a topic that is known as financial inclusion. Financial inclusion means providing financial services to every section of the society. So in financial inclusion, you might have heard about the government scheme of Jan Dhan Yojana of the government. So that was a scheme for financial inclusion, and especially the women. And it was run by the government. And so that kind of account was can be opened without any amount of money in that account. So that can be opened with zero balance of money. But since it was mandated by the government, most the banks were supposed to follow that. The orders of the government, the regulations that dictated by the RBI or other financial regulators. So the financial inclusion. So microfinance is also one of the uh, one of the strategy for financial inclusion. One of the reason one of the method through which financial inclusion can be achieved. If financial inclusion is the goal, it can be achieved through microfinance also. Microfinance means providing financial services to the poor, to the low income group in the society. It allows low income entrepreneurs to undertake small businesses. This is also one of the aspect of microfinance, that some of the poor people who have some idea of starting their own small business, but they cannot because of the lack of money, because of the lack of finance. So microfinance institutions have some schemes to support those small entrepreneurs also. So like other lending, microfinancers also charge interest um, and have their own repayment plans. So it's not that um just like banks provide loans to the businesses, to the large businesses, and they charge some amount of interest from them that normally ranges right now around 12%, 13%. Um, uh, so uh, so in microfinance, if an institution is providing a small loan to a small entrepreneur, they also charge interest amount from them. So this happens in the traditional microfinance. I will use two terms: traditional microfinance and Islamic microfinance. Traditional microfinance, I will refer, I mean the normal microfinance that exists around the world, in India and different parts of the world. Islamic microfinance, if the main thing in Islamic finance that differentiates it from traditional microfinance is the absence of interest. So if it is an interest-free model, that can be termed as Islamic microfinance. So this is I mean, these two words or technical terms or I will use, that is traditional microfinance and Islamic microfinance. So in traditional microfinance, all schemes are based on interest. So lending is also based on interest. And let me tell you a very interesting thing, that normally the banks charge an interest rate like, say for example, 12-13% from businesses. But in microfinance, the rate of interest is very high. I mean, more than double of the interest that is charged by the traditional banks and financial institutions. um, so this is one of the aspect of Islamic microfinance, that is traditional finance, that they charge a very high rate of interest. So it may be around 35% or 40% or even more than that. And the reason why they are able to charge this much of interest rate is that normally they lend for a very short period of time, say for example weekly, and they demand the money back after 1 week. So if I will give you today 100 rupee, and I will demand from you 101 rupee after 1 week. So it feels that it is very less amount of interest, but 1 rupee in 1 week will translate to how much interest rate? Anybody? If I lend you 100 rupee, and I ask you to return that 100 rupee after 1 week, along with an interest rate of 1 rupee. So how much interest it will be?
More than 50%.
Yes, more than 50%, because there are 52 weeks in a year. So 1% multiplied by 52, that will be around 52%. So, but since the duration is very low, we don't feel the pinch of this interest rate. I mean, the persons who borrow the money don't feel that this is a lot. But if we calculate, it's much more than the interest rate that is charged by the traditional banks or mainstream banks. Microfinance includes providing all gamut of financial services to the poorest of the poor. The same point. all gamut of financial services. The key word here is all gamut of financial services. There are different aspects of financial services, and microfinance means providing all those financial services to the poor, be it payment, for example, payment. So right now, say for example, the adoption of UPI is increasing. People are using Paytm. The vendors, the shopkeepers are using. So that is also part of financial services. Payments is also one dimension. So if poor are using that system, that payment system, so that is part of microfinance, or that is part of financial inclusion. Microfinance has proven to be an effective and powerful tool for poverty reduction, especially in the most prominent example of this microfinance that has resulted into poverty reduction is given from Bangladesh. Uh, the person's name is Muhammad Yunus, and he got a Nobel Prize for his idea of microfinance. And the name of the bank is Grameen Bank, and that is a successful story where he was able to, you know, help. Especially, he targeted the women. So one of the aspect of microfinance is the empowerment of the women also, because Muhammad Yunus and Grameen Bank basically targeted women, and the loans were meant for women. If any household women wants to increase the income of the family, and she wants to, say for example, purchase a buffalo, or say for example she wants to purchase a sewing machine, she wants to start some vegetable selling shop, or etc. I mean, small ideas that require a small amount of money. So Grameen Bank had some schemes for them, and they benefited from this. And there are some studies that suggest that a lot of women, basically, I mean, especially women benefited from this microfinance in Bangladesh. And that is a successful story of the implementation of the concept of microfinance in Bangladesh. But there are some other aspects also. It's not, like everything, there are pros and cons. So if there are some negative aspects of that, successful story of Grameen Bank also. Financial services. What kind of financial services are can be provided under the uh, under the umbrella of microfinance? The most prominent and the most important is microcredit. Microcredit, as the name itself is self-explanatory, that it's a credit in a small quantity to the poor. So if poor people need some amount of money for some, for any purpose, uh, so they can approach they can approach microfinance institutions. They can support them. So microcredit is one thing that microfinance institutions provide. Normally, this is the only thing on which most of the microfinance institutions focus. Their focus is only on microcredit. And what is the reason why they, provide? I mean, they focus only on microcredit, because that is the most beneficial, financially, most profitable business for them. As far as some other services, for example, micro equity, a micro entrepreneur investing in a micro enterprise through participating in its financing uh, can be termed as micro equity. So if the microfinance institution is providing loan to the poor people, or to the customer who is to the customer, that can be termed as microcredit. But if the financial institution is becoming a partner in the business and sharing the profit with that person, that can be termed as micro equity. Micro equity. So, so this portion, I mean, this aspect of this is slightly neglected. There are, financial microfinance institutions that provide this kind of services also. They, they invest in the businesses of small people at a that they conduct at a very small scale. But this is a very challenging thing. This requires a lot of other monitoring costs also. uh, so that is why most of the financial services in microfinance institutions are dominated only by microcredit, not by microequity. Then savings is also, as I have mentioned, that it's also a financial services, one of the financial services. So poor people want to save, but they are constrained by the multiple demands on their low incomes and lack of available deposit services that matches their needs and expectations. Savings. So if in a particular population, some portion of the people are not able to open their accounts in normal banks, the microfinance institution should act as the service provider to the poor people, and the poor people should be able to open saving accounts. They must be able to save on a weekly basis, or on a monthly basis, or a daily basis. So this is also one of the aspect of microfinance. Then fund transfers. So fund transfers, providing remittance services. If the transfer from, I mean, can be domestic, or for maybe international. So that if a microfinance institution is providing this kind of service also, so that can be part of their product. Then one of the dimension of financial services that is the most neglected one, as I have mentioned in the beginning also, that is micro insurance. That insurance itself is very much very less has very less penetration in the Indian market. So talking about micro insurance is well before time. So micro insurance is the protection of low income people against specific perils in exchange for regular monetary payments, premiums proportion to the likelihood and cost of risk involved. And uh, the the most important risk is the health risk, or the accident risk, or the health risk. uh, so health insurance. So small people, I mean poor people, are normally not covered by any insurance schemes, and the normal insurance companies are also not interested in them. So to sum up, microfinance implies provision of financial services to poor and low income people whose low economic standing excludes them from formal financial system. So providing financial services to the people who are normally excluded from the formal financial system. The reason why they are excluded is that, normal or formal financial system don't consider them profitable customers. Say for example, let us take the example insurance also. So for insurance, they will not be able to pay a high premium. They want little protection against little amount of premium. So this will, managing this kind of service will involve a lot of handling and distribution cost, marketing cost. The geographical area has to be very large, and the cost will increase. So it is not financially attractive for them to provide micro insurance. That is the main reason. Okay, so thank you very much for joining this class. This was the